later. Sometimes my affinity is to just stay with it, but in most cases, like this case today, you know what? Let's just cut bait, and we'll come back around to it at another time. Does that make sense? Okay. So like I said, if you have any other questions, go ahead and type those in, or if you have any particular charts you want me to take a look at, or even Ross wants to take a look at. So I'm going to go ahead and I'm going to introduce our guest right now, and it's going to be. I think it's going to be great. We're going to talk with Ross here. He's and I think he wants to kind of keep his name hidden here. So unless he wants to tell you what his last name is, I'll leave that up to him. So Ross has been a buy-side trader since 2002, trading mostly volatility, right? And this is what I'm going to really be particularly interested in learning and listening from him. He's one of the two founders who trades a nine-figure assets under management, mostly focused on volume of volatility, vol arbitrage. He's been in the business for, like I said, over 10 years. He's a huge Battle fan. He's been heavily, and they've been heavily in for the last few years. And he's got clients that are high net worth individuals or institutional, mostly in their fund. And I believe his results have been fairly strong. So, you know, listen, without further ado, I'm going to go ahead and bring in Ross. We're going to have a little how we're going to do this here, guys. We're just going to have a little discussion. I want to let him kind of roll with what he kind of wants to do. I've got my charts up, of course, and if he wants me to bring up something, we'll go ahead and do that. And hopefully we'll all be able to listen and learn something and have a good time here. So, hey, Ross, you there?
Yes, I am. Thank you, Bob. Thanks for the introduction.
Great to have you here, Ross. I know everybody's really interested to hear what you have to say. So, how are things going with you in the markets right now?
Good. You know, no complaints. This market is, as everyone knows, anyone who has real money on the line is very, very humbling. And as soon as you think you have a grasp on everything, you're usually kicked in the teeth. And that was certainly the case today for me for probably the umpteenth time in my career. But you know, the beauty about the markets is every day is a new day, so that's why we do what we do. Scoreboard resets. One of the things I figured I would talk about, and I apologize to the people listening in advance if this is too basic for everyone, but a question I've been getting a lot of lately from both our investors as well as my friends and family and other people I know who follow the markets and who tend to watch CNBC is are the markets complacent right now, and is volatility low? Right, everyone looks at the VIX and thinks the VIX is 13, 14. Vol must be cheap here. It must be a buy because it's just too low and it doesn't make sense. And all we do is go up every day, and we go up 20, 30, 40 cents a day, and no one's worried about the downside fear. And so that's a question I've been asked a lot. I'm sure anyone who trades volatility of late has gotten the same question. And the first thing I always tell people, first of all, is to ignore the VIX. Again, I apologize if people here are a bit more sophisticated, but the VIX is slightly mathematically flawed and is not a good barometer of fear, despite the fact that people like to call it the fear index. And it's not a good measure of volatility per se in the market. And some of this actually speaks to, Bob, what you were talking about with the correlation index, the JCJ that you pulled up before. Well, what I like to look at, first of all, if you have to look at something to determine whether vol is expensive or cheap, I always tell people, look at the futures curve. Look at the VIX futures curve. Right now, the VIX spot is, I'm looking it up, is 14 and change at close today. But if you actually look at the futures curve and look at what's expected going forward, just as an example, out to April, which isn't that far out, volatility is priced at 16.5 on the futures. That equates to roughly a 1% move a day, every single day between now and April expiry, for you to make money if you're long volatility and you want to offset your decay.
Hey Ross, I didn't bring up. I don't have the curve, but take a look at what I brought up here over here on the right-hand side, the little snapshot. This is really basically what Ross is talking about here. The first one, obviously, is
the J3 is April. Sorry, J3 is the April VIX. Yeah. Right. So if you're looking at that,